If you're seeking for dividends, you can actually explore the cryptocurrency markets. It takes knowledge to do so.
If you're new to investing at any age, it's not too late to start. However, depending on your age, you might actually look at different asset selections. What do I mean by this? Well, welcome back to another video. If you are new here, please subscribe. And joining me now, I have Michael van der Poppe, full-time trader at Amsterdam Stock Exchange, and also Crypto Michaël on YouTube. So Michael, thank you so much for joining me today.
Yes, thank you very much for inviting me to the show.
Awesome. No, I'm really excited to have this conversation. And I think this conversation at the moment that we're having is, depending on what age our viewers are watching, their asset portfolio allocations might be slightly different. And we're going to get to what that could mean in just a second. I think the good starting point would be to look at maybe people that are legally new to investing from the age of 18, say, to 25 around the world. And they've probably got some small assets or savings or maybe gifts from their parents, and they're looking to position their portfolio. And we're seeing a lot of buzzwords around crypto at the moment, and I would love just to get your insights on where people should allocate and why.
Well, it's a discussion that you have with, first of all, your risk appetite, how much money you have, what your horizon is, what your target is. But the overall trick with cryptocurrencies, if you're investing in crypto, is that people are always seeking for that next 100x or searching for the big, like, gold bar or something that they make themselves a millionaire, as that's what they see on social media. And I guess where new investors have to start and have to consider is thinking in a way of Bitcoin as a savings instrument rather than an investing instrument, and start having that mindset in which their preference goes to a longer horizon than becoming a millionaire the next day, because that's just not happening at all. But for youngsters in general, where should they start? I guess it's going to be crypto, commodities, and cash, the 3 C's. But if you are young, you can still make very risky bets as you don't have any responsibilities at all. So I would just focus on crypto. However, it's very difficult. It's a wild west with lots of ups and downs and volatility, emotional roller coasters. So, but there is the actual opportunity right now.
Mm-hmm. I have to agree with you when you say, because in any situation, recession proof is cash. Commodities are kind of a safe haven, more traditional asset class. And then obviously you've got crypto. And as you were mentioning there, if you're kind of 18 to 25 and you're looking to cash out at some point, realistically, it won't be in the next 10 years if you're looking for a longer term investment. Bringing to the next conversation then, what about, we're seeing a lot on stocks and also dividends as well. So maybe for a new investor, maybe they're not even sure of the difference between stocks and dividends as well. Are you able to break that down for our viewers?
Well, you've got the overall old-fashioned look in which investors are looking for dividends to increase their profits on a yearly basis. So what you try to do is that once you start to make money, you want to have a passive income or an additional return on your investment. And usually that's combined with having profits or an annual income with stocks, etc. However, the overall dividend market is just rubbish right now. It's about 0%, so you can't get a dividend. Stocks are also not focused on dividends at all. It's just a very big gap between the real economy and the stock markets nowadays. I was just focused today about it. The Netherlands hit a new all-time high with the stock markets, while in the same chapter we saw 10 big companies just firing people. So it's not focused on that anymore. But if you're seeking for dividends, you can actually explore the cryptocurrency markets. You can get that dividend by staking stable coins or using that in a lending program or using it through any platform. You can also just stake your tokens in itself. So the dividends are also made in the cryptocurrency markets. However, it takes knowledge to do so, and risk. There's a higher risk involved.
And then also, so you've mentioned, you've given us that little bit of an overview there, which was fantastic. For people that then don't know about crypto, because it is overwhelming. If you go on CoinMarketCap, there's thousands upon thousands of cryptocurrency coins. And I know on your channel, you interview a lot of projects as well. So when it comes to cryptocurrency positioning, which is a whole other rabbit hole in itself, where can people look to begin, and what kind of diversification would you suggest to them?
I think if you start with crypto, you should start with literally understanding what money is and what Bitcoin in itself is. if you do not understand anything of that, then crypto is none of your business. So the first step is to understanding Bitcoin and the concept of money. And then next, it becomes really complex, as in there's so much stuff out there and there's so much garbage out there. So the first thing people are going to look at is the coin that brought them into the cryptocurrency world. So usually it's just a friend making thousands of dollars with a certain project going crazy, and that's the one they are going to buy as well. So they have to they have to start understanding market economics, how a market evolves, why something is going up. Is just rationality, is that actually a good investment? Start reading up on what DeFi is, start understanding the fundamentals before they even want to consider putting any money into the markets at all. And I think that's also the ethical part and educational part of influencers and YouTubers, which I still see too less right now, is that the people that are watching your YouTube videos or your tweets are actually people seeking for information to jump into the markets. And when I see videos of people saying this coin goes 100x and it already went 20x, you're literally bringing people into a very bad situation. So there's just way more ethical manners as well. And lots of stuff is found on social media. So if you dig through all the shitstorm, you can still find valuable content to start exploring yourself.
Absolutely. And I think I found a lot of value in YouTube, as you've mentioned, but also Medium as well, which is kind of an article hub for companies to share kind of insights and blog posts too. If we look past the age of 18 to 25 now and say 25 to 35, a narrative that we do hear quite a lot from cryptocurrency YouTubers is that there's this financial crisis pending or looming. And if we look at the performance of stocks and also the cryptocurrency markets in the past 6 months, there's exponential growth. And a lot of people are saying, well, this can't continue for much longer and a correction is in place. So for people that potentially are looking at cashing out their investments slightly earlier, maybe they've got a shorter lifespan on the money they're looking to put in, which then also automatically makes it a higher risk movement. What would you suggest for these kind of people?
It's difficult. Like, where are you going to shift your money right now? As in, are you going to cash out towards real estate? Are you going to buy stocks? Both of these markets are fueled by the inflationary system that we're living in. So I would also recommend people to read the article from Arthur Hayes. He mentioned negative convexity. It's very interesting to read. But if you're looking to cash out, I guess if you're assuming that there's a recession going to happen, cash is king. In a crisis, cash is king. And if a crisis is going to happen, and I also agree that within a few years we will have it, Bitcoin is going to drop as well. Crypto is going to drop as well. Which market is not going to drop? It's literally just cash. That is where people are running to in the first stage of the crisis, where the biggest drop down happens. So literally just having cash on hand, if you don't see any option at all, is just the best option. Having cryptocurrencies, but when you make money, just cash out, stay in cash until everybody expects the markets only to go down even more, and then you should be jumping into those, and then you should be buying that house. Like, I'm in the group of the people that frequently buys their first home. I choose to rent right now instead of buying my own home, which is a big difference. And when I say this, probably people are going to shoot me for it, but I'm not one of the people buying a home right now. That's just too overvalued. And when it starts to shift and we get that big crisis, it might still take 20 to 30 years before it comes back to this level. So cash is king, basically.
Fantastic. And now, so finally, as a summary there, because you've given us loads of points to think about, which our viewers can then go and obviously do out their own research. But if you had to select, because you are a trader as well, 3 assets that could be completely different, they could be in the same asset group that you're looking at right now that are either potentially undervalued or just really interesting concepts to you that you think maybe should have more attention than they do, what would they be?
Well, crypto, which is very easy. Second one, literally just cash. And the third one is commodities. And then you should be looking at commodities like uranium and silver. Those are interesting ones. Those are not really covered that much, and the valuations are still relatively low. If you want to seek for stocks, I think you should be looking at common stocks, which are literally those old ones which are not really interesting to buy, as everybody buys Apple. So you should not be focused on tech stocks, but those old-fashioned stocks if you want to get in those, but mainly focus on the triple Cs.
Okay. Fantastic. Thank you so much. And now just finally, because I would love to ask you how you got into trading yourself and how your journey started, how you found it initially.
Well, I studied economics in Amsterdam, University of Amsterdam, which I didn't find interesting at all. But during my study, one of my best friends invited me into the crypto world. That was around the same period of time in 2017, when the alt season, the famous alt season happened. So I saw all those green numbers, and then I started to dive deep into to investing. And literally the first things I bought were diversified, Ripple, and Verge, all those low valued coins. Made some huge mistakes down the line. 2018 and 2019 were very painful for the portfolio. Learned a lot of stuff, and then I started to grow with the experience that I have. And I guess that right now many people are going to make the same mistakes as I've done back in the day, but we try to avoid that and bring good content, right?
Absolutely. And it happens as well. I think my one big trader mistake, if I could tell my viewers, was I kind of got overconfident in a bull market, and I thought I was a day trader. So I was getting too confident and too big for my boots, and most of my portfolio was just completely eliminated because I thought I could trade short when really I was a 12 to 18-month investor. I can't do these short trades. What would yours have been if you had to give one lesson that you've learned along the way?
Well, I guess it's the same. Sitting too long into my positions and just thinking that I know it all, which is just not the case. So I've made some huge mistakes by just staying in a position. And one of them is diversified, which I bought significantly in 2017. I saw it go up and just drop down 90% as well, which is just a big lesson for people, is that they turn greedy once they start to make money. Then all of a sudden they know how markets work, until reality kicks in, and then they're losing money, and then they try to sell out of emotion. So I think staying grounded and just focus on the plan that you have initially. And also, if you are an investor, do not switch over to becoming a day trader. I see it often. That doesn't work out, as day trading is just way more risky and completely different game. And just taking it slow, as in, you don't need to make that million right now. You just have to make the right decisions. And if you make the right decisions, the money will come along.
Amazing. Thank you so much for your insights today. I'm sure everyone learned a lot. I certainly did. And it was a pleasure to have you on the channel. I'll link to your channel in the description below. But Michael, thanks for your time today.
Thank you very much for having me on.
Thank you. That's all for myself and Michael, but we'd love to hear how you found this video. So share your thoughts in the comments below.